Hey everybody, what's going on? Pete, aka Joseph Von Schmidt. Sorry, I shouldn't have started my video drinking water, but hey, it just happened. How you guys doing again? Hey, this is my next video I'm shooting. Last time I talked about, beginning stuff, what a bull market was, what a bear market is, what to do with the stock, red and green. Check out that video. If you want to see what I'm talking about on the beginning phases, this is my next video. Again, I like to start off by saying I'm not a financial advisor. I'm just a guy who took some money, invested in the stock market, made a great profit, 130 some odd percent as of my Virgin Galactic investment and some other diversification investments. So again, take everything I say with a grain of salt. Do your own information, just do your own studies. I'm going to be talking about stocks that I do. Feel free to follow what I'm doing. If not, do your own research, and we'll go from there. And I'm there to support you. Basically, what I'm trying to teach my viewers, my friends, and the people who ask me, and the people that I'm helping. I'm getting into the point of helping so many different people at so many different times. It just made it easier for me to start doing some videos as I can reach not only all of my friends and all the people that just don't or feel that they're bothering me by constantly texting me, emailing me, calling me about questions about the stock market. Not that I'm completely against it yet, but it's just starting to get a little overwhelming, especially I have a 2-year-old and a 2-month-old. And so, yeah, like I said, last time we talked about a bear market, a bull market, red stocks, when a stock is in the red and a stock is in the green. Green is good, red is bad. Unless you get into options. Options is something totally different. I'm really not going to touch into that, but there is a way for you to make money on a stock going up and a stock going down. You could call it what's hedging your bets, and that's let's just say that's something for next time. All right. Anyways, so let's go to the next phase. I like this program called Webull, and I go in there and I like to use it. Again, down below I'm going to add a link. You can sign up for it. You get a free stock just for signing up for it. It's not too bad. Your stock's going to vary. I'm sure it's not going to be a stock that's going to make you rich right on the go, right off the cuff, but it's going to be something that gets you started, gets you interested, and you get it for free. And then when you make your first deposit, you're going to get another stock, and that's going to give me a stock as well, just for following the referral code. I appreciate it. Again, Webull, I like this program, and you got to forgive me, guys. I don't have all my fancy analysis charts up or anything. This is just kind of a straight video, this kind of introduction to the stock market. Again, you don't need a ton of money to make a ton of money. For instance, I have taken what was one of the stocks that I recently invested in, and it was a little amount of money. I believe it was Sundial, SDNL stock. I threw a couple $100 into it when it was around under $1, went up to $1.50. I saw the profit gains and margins. I think I made maybe like $80, and $80 is just, to the big gurus out there, it may be nothing, but to a simple guy like me, making $80 on top of my daily routine, my work, and the things I'm doing, it's not a bad return for me, as well as I have other stocks using. So what I would do is I would take that $80 investment from Sundial, and take my initial investment out, a couple hundred. So now I have, let's just say I invested $300-400 into it. Let's say 400, so it's simple. 400, now I have 480. I have 480 to move into another stock or another thing that I like, or build a better position in one stock that I'm actually following right now. There's you might hear it as it comes up, and it's AMC and GME. AMC movie theaters, of course, everyone kind of has an idea of what that is. The movie theaters, AMC. GME is GameStop, and they have you see a stock company that is going out of business, and a lot of these corporations are putting what's called shorts on it. They're trying to make profit by driving this company down into the dumps, and this group called Wall Street Bets. You can look them up and do your own research, but they kind of get the wind of this, all these squeeze plays, and what happens is they get people behind them, they pump a bunch of money into the company, which forces the squeezes to pay, so it has the opposite effect of what they're trying to do. They're trying to gain money by bankrupting a company. What happens is they end up losing a ton of their money investments to the people who are investing into the stock. Again, I'm not a financial advisor. Take that with a grain of salt. If you start doing information, reading charts, you can find these companies and you can get into that. As this is video 2, I would suggest, if you're going to do something with like volatile stocks like that. Volatile stock means it's a stock that can be up $5 1 hour and down in the red, or $5 green 1 hour and $5 red in the next hour. So that's a nerve-wracking thing if you have a lot of money that you're playing with, or you're playing with your rent or mortgage, which I don't suggest you do. I suggest that you put a little bit aside, take anywhere from 5 to 10% out of a paycheck or something, and use that towards the market. And even if you can't take 5%, you can put 1% aside. You can start putting stuff and transferring stuff into your account and building up, and then start buying your positions. Then say, if you want a share of Tesla, there's some sites out there where you can buy partial shares. I really don't like the site. I really don't like the name of it. I don't want to share it because there's a lot of shady stuff going on with it. But there are places out there that do allow you to buy partial shares, but they've locked people out of their accounts, and they're not really that people friendly, I don't think. So I'm not going to promote them. But you want to buy Tesla. Tesla's somewhere between $700 a share right now. Of course, starting on the stock market, you're like, wow, I don't have $700 to put into 1 share of Tesla. Well, what you can do is you can start, you can start saving. So you can start putting your money and trying to get it, and then you watch the stock. You watch the stock because they have good days and they have bad days, and you want to buy on the red, which is when the stock market is going to take hits. It fluctuates because there's people that are having emergencies that need to pull money out. You just don't know what days it is. There's people that need surgeries. There's people that are retiring. There's people, 401ks getting cashed out. These are all things that affect the market. And then just sometimes it's just general, people are spooked by the market and the activity, and what's going on right now is the Feds and bond yields are they're going to affect the stock market. Again, that's for down the road, but I just want to share it with you. So in general, that's kind of video 2. I'm trying to keep these short. I'm trying to get you guys acclimated to the stock market, to investing, to be comfortable, get your feet wet, kind of give you some ideas of what I'm about. Next video, I'm going to talk about, the cons of where I was and how I learned certain things in the stock market. All right, until then, hey, have a great week, and I'll talk to you soon. All right.